Hey everyone, welcome back to another roundtable discussion by the fifth person. So my name is Adam, I'm the editor-in-chief, and with me once again I have my regular guests, Rusmin,
hello,
Victor,
everyone.
and Kenny.
Hi.
And this is going to be our last roundtable discussion for the year. So we're going to end off the year with a quick roundtable about the investment lessons that really hit us during 2020. So I mean, this year has been quite a crazy year in a way. So we want to share, the stuff that we've learned investing during the markets during this period. So guys, what are your biggest investment lessons this year?
All right, so I think maybe let me start off, just summarize about this year. I mean, this is the most interesting year that all of us have actually gone through because we have both the bull and the bear market in one single year. We have market crash by 30% in the US within a month, and then subsequently 6 months down the road, the market have recovered all the losses which happened in the first half of 2020, right? Yeah. So there are many lessons that you can draw upon in terms of investing, and one of it for me personally is, of course, changing the target price, right? So what happened back then was, I still remember in the month of March of 2020, at the peak of the pandemic when the market was melting down, every day you're just seeing the prices, collapsing by 5 to 10%. And I remember seeing my watch list, a lot of companies were triggering the circuit breaker, right? So you couldn't trade, those companies suspended for 15 minutes and then you can only place your order afterward, right? So that was the moment where it was the most intense. And I still remember trying to buy this company called MasterCard. I bought MasterCard at a time when the price was crashing down at about $2 and $245.
Well, $2 would have been a great price.
Yeah. So I remember I trying to place the second tranche at about 210, right? So at that time, the market was melting down every single day, and it was in the middle of the night. Before I went to the bed, I was keying the order to put and buy the second tranche, and then my wife suddenly told me that, you should key in your orders below $200 because the price is crashing so fast, right? So I wanted to key in at 210. And at that time, so I kind of without much thought, because the market was melting down so fast, and maybe I got a chance to pick it up at below $200. So I key in my order price at below $200, and next day when I wake up, MasterCard just went up to 230, and I missed my second tranche. Okay, so my key lesson here is that I was actually have already priced in mind the target price that I wanted to buy for MasterCard, but at the time, I don't know why, I basically didn't stick to the system, and then I changed the target price because everything was melted down so fast. And today, as I look back on the hindsight, it was just a stupid decision. I should have bought MasterCard at the time, and today I'll be sitting in a even much more profitable than my first position.
So you wanted to buy it at a price, and the market already got to that price. And under normal circumstances, you would have just bought it.
Yeah.
But then because it was such a crazy drop for the markets at those times, you just really thought that it will go even lower.
Yes. Yeah. So there are many reasons why I did that also, because first I have a limited capital. At the time there were so many companies to buy, and I was trying to be more careful on the price that I enter on those companies. So I was trying to filter out companies that are a lot more resilient. So I'm focusing my resources, capital on those companies. At the same time, MasterCard is on the other basket, where these are the companies that directly hit by the COVID-19, right? Because spending across the travel, MasterCard actually contribute one of the big segment over there. So I kind of affected. So I kind of expect them not to recover that fast. The price may be overhang for another couple of years before the pandemic is over, right? But who knows? I mean, within 6 months, everything just go up so fast, so quickly.
Yeah. So it was your wife that told you it was going to go down, right?
Well,
so what's the moral of the story?
Yeah, I can't blame her for sure.
Don't listen to your wife.
I hope.
No. I mean, do we keep this in the video?
I hope my wife is not watching this.
But so it just went way below. It didn't go down.
It didn't go down to 200. It was the worst. I remember was 203. So I could have bought my second tranche at that time. But today, MasterCard is above $200 plus. Yeah.
But the good news is we did get stock of MasterCard. We're still shareholders, and I mean, we got in when we could get in, and it still turned out all right.
So the biggest lessons again for me is that during the downtime, stick to your plan. Don't change your target price, because this is a very common mistake that I observe also. Not just happened to me, but happens to a lot of us. who trying to change the target price because everything was being sold down so quickly. All right, so we tend to extrapolate what happened like few days ago, and then it's going to happen again all the way. Right, so it should not be that way. You have to stick to your target price, allocation plan, and then stick to it. Yeah.
Yeah. So my investment lesson is pretty similar to yours, Rusmin, because I was during March and April was like a crazy time. The markets were just really going down. I mean, this has been recorded as the fastest drop in history for the US markets. And I still remember in March when, COVID just kind of like hit the US, and then no one really knew how COVID was going to affect the country, right? Trump was like bungling his response to the whole pandemic. You don't know how many people were going to get infected. The case counts were unreliable. But I was reading the forums and I was on Reddit, and a lot of those like frontliners, in healthcare and all that, they were saying that it's crazy. It's going to get so much worse. There's no PPE. The regulations, they don't really care about it. It's just going to be basically like it's going to explode.
Yeah, there was so much bad news, I remember at the time. Reading the press, people are getting out of job, businesses are closing down. It's just so scary, right?
And that was in March and April, and you had no idea what's going to happen. So at that point, the market had already gone down maybe like almost 30%. And I was remembering that, look, it's going to get worse. Everyone knows there's going to be a 2-week incubation for COVID, and then you're going to start seeing people die. Literally die. And I was thinking, look, it's gone down so much, but I think it's really going to get worse because this incubation is going to hit and it's going to just exponentially grow because how infectious this disease is going to be. And I was betting, all right, in my mind that it was going to go lower. So same as you, like Rusmin. So it was like you thought MasterCard was going to go lower. I thought the markets would go lower. And then the incredible thing is the moment that happened, and people really started dying, in the US. You look at the number of daily cases, it just started going up. And the incredible thing was that the markets went up as well at the same time. I was like, that was a shock for me because we always they say the stock market is not the economy, and they say that a lot of times. But in some ways, you kind of feel that there's still some link. You still need people to be around to survive, right? To shop and to boost the economy for the businesses to do well. But it was just really such a disconnect to see that as people were dying and more people were dying, the markets just kept going up. They just didn't care. And my mistake was that I should have bought more, right? Because I thought I was going to go down some more. So I didn't deploy everything that I could. But then again, you can't predict that. But again, like Rusmin was saying, you got to stick to your plan, to the system, and thankfully, of course, we managed to deploy some of my cash. Our cash, and I deployed some of my cash as well. So, but then again, my mistake was trying to predict how the market was going to go.
We could have all in at a time, right?
I actually sold everything that I own, my house, my kids, everything, and just invest in the market. But obviously, that's the benefit of hindsight. We just have no idea. So stick to the system. Yeah, that's my investment lesson. So that's for me. So what about you guys?
Well, for me, it's like I've learned a lot from you guys. Don't listen to your wife, don't listen to economists, don't listen to news anchor. But I think most importantly is really be prepared. Have a watch list by the time when the market goes down. For me, the lesson is just to be prepared. To know what are the companies that you want to invest in, and then once it hits your target price, just enter in several tranches. Have a plan. So the idea here is to be disciplined, stay within your circle of competence, and invest for the long run. So I think one of the greatest observation I had is because a lot of people have been asking me when it crashes, like what are the top few stocks that they could get in. So do you guys know what are the top few hottest stocks in 2020?
Tesla.
Yes.
I should have bought Tesla.
So the thing is, when you do not have a plan, emotionally you'll be put in the direction to find the hottest stock at that point in time, which one will give you the greatest return in the short run. So the top 3 hottest stocks in 2020 right here, I have this chart right here, is Novavax, basically a producer of vaccine, went up year to date 2,900%.
Wow. Okay.
I mean, if you have money, you probably make a lot of money, right?
Yeah.
And then Tesla went up by 642%, and Zoom went up by close to 500%.
Oh yeah, Zoom was a really big one. I mean, it was all over the place when COVID really hit.
Yeah, but the thing with all these hot stocks is like you do not know when when to get out, when to get in, when to get out. Unless you're a very good trader, probably you make that short burst. But in the long run, it doesn't make sense, because for us as value investors, our goal is to invest for retirement, right? Around the next 20, 30 years and have this nest egg that we can retire comfortably on. So what I want to share is the comparison between Novavax and MasterCard, right? You see year-to-date share price, Novavax went up by 2,900%, and then MasterCard only went up by 12%, which isn't much because it went down and it came back up. But then if you see the share price performance in the long run, you can see MasterCard went up by 1,230% compared to Novavax of 136%. Novavax is almost like fireworks, right? In the short run, they make a lot of money, and then people are very optimistic about future because this cash flow that comes in, they can reinvest into the pipeline and produce new drugs, potentially produce new drugs. But all these are not, I mean, you cannot
guarantee.
There's no guarantee.
Yeah.
You cannot be certain about future. But then, however, MasterCard, you can be sure that they'll continue to make money year after year.
Yeah.
Once the travel recover, they make their cross-border spending, their cross-border revenue will start to come back. And then as people do more digital spendings, right, contactless payments and stuff, people will tend to use more cards. So that will support them. And last but not least, you also have to remind yourself that, the stock price actually eventually will follow the fundamentals of the company. You can see that the revenue for MasterCard actually grew for the past 9 years, right? And compared to Novavax was actually flat, and then their net income were growing year after year since 2011 compared to Novavax. So that's why there's this quote by Warren Buffett that I really like, say investing is not a game where the guy with the 160 IQ beats the guy with the 130 IQ. Once you have ordinary intelligence, what you need is the temperament to control the urges that get other people into trouble in investing. So this really resonated with me this year.
So you were just kind of like observing that, because I think the crash was really something, but the rebound was also really something, right? And I think that's why you see a lot of people who, I think, kind of like go out there on the streets. You kind of see like people who don't really typically invest, they start to talk about the stock market and what stocks they're looking at. Tesla is a big one. So that's what you're observing. And then these people are kind of like rushing into these hot stocks, which may not actually be as successful as a MasterCard over the long term. That's what you've seen, right?
Yeah, I mean, I think people are just focused on the returns or the how much the stock price has gone up 4-5 times, and then they believe that this is going to happen in the future without knowing a lot about the company's business, how they generate their revenue, the business model. I think which is very risky. So
I think the lesson is you must have like a kind of like a watch list of high quality companies that you want to look at straight away the moment like a crash happens or the prices drop. You know where to deploy your capital. But if you don't have anything like that and you kind of like still like a newbie, or like everyone's investing right now, it's like, what do you look at? And then you kind of like look at the news and everyone's talking about all these hot stocks like Zoom and Tesla, because they just keep going up, and that's what makes the news. And then you kind of like get drawn into that direction, like part of the herd, and you invest in that. But then you don't really know if long term is going to work out well. But I mean, if you made 2,000% this year, it's not too bad still, right?
Yeah, for sure.
But then over the long term, you can't win all the time like that.
Yeah.
So I think that's what the lesson you've seen for yourself this year.
Yeah.
Okay. So what about you, Victor?
So the thing that I learned about this year is that actually not all companies are created equal. Okay, so when the pandemic happens, right? Personally, I always want to buy the price of the company lower. Okay, so I have a target benchmark that maybe 20% drop from the intrinsic value. Then I will look into buy into the company. Okay, so we have companies like MasterCard that drop 20%, or maybe other companies that drop 20%. But there's one particular company, right, like Adobe, right, that I want to buy this company, but the share price didn't really fall. Okay, and finally when it fall, right, it only fall by 10% from the intrinsic value that I've calculated. And I remember at the point of time I was still thinking, how come this Adobe is not falling, right? So I was discussing with Bruce Min and talking about this, and Bruce Min was actually sharing me, that actually, you cannot compare, Adobe as compared to MasterCard. Even though MasterCard is also recurring, but they are affected by the COVID. But Adobe, right, regardless of what, they are not affected by the COVID. So this company don't tend to drop as much as MasterCard, which they drop more than 20%. So in the end, I listened, I think, it does make sense, So I actually, I went to bought into Adobe around 275.
That's a good price.
Yeah. But of course, I will say that this is not a mistake because it didn't really happen because I really buy it because I talked to Rusmin and Rusmin saved me from that. So
tonight did not
Yo, Rusmin one, okay.
yeah. So I think this COVID crisis really, because if you look at the global financial crisis, right, regardless of any of the stocks, right, they will just fall because it's a global financial crisis. But if you look at this COVID, right, some stocks, right, falls and some stocks don't really fall because some is affected by COVID and some is not affected by COVID. So you cannot see crisis in terms of you need to understand what kind of crisis it is.
They're not all the same.
Yeah, and whether it affects all companies or it only affects certain companies. For in this case, I treat it like a global financial crisis. I expect all the companies to fall heavily, but it's not the case for this COVID thing, and it really makes me think about it.
Yeah, Adobe is kind of like, if it's like whether there's COVID or not, I think people are still going to be subscribed to Creative Cloud.
Yeah, correct.
And use the Photoshop and all the other creative like software that they have, and they are probably on an annual plan as well.
Yeah.
So COVID may not have. In fact, if you have a look at Adobe's results, they didn't really get affected by COVID at all. They were, and the share price has recovered so much already since then.
So actually, if you go and think about it, actually, history of stock market crash, right? Every history of stock market crash, there's a unique factor to it. So every time when you're at that situation, you need to understand, like, okay, if this crash, what were affected, right? What is the mainly affected? Do this company get affected during the crash, right? So in this crash, you know, all the tech stocks don't get affected. Right, they actually went up. They don't drop a lot. Amazon don't drop a lot. They went up. Stocks like Sheng Siong, the supermarket, they actually went up a lot because everybody is rushing to supermarket.
It's an essential service.
Yeah,
you need all that stuff to survive.
But if it's global financial crisis, Sheng Siong will just go down. You know.
Yeah, it's different. So every crash is built differently, and you need to understand what's causing it. Yeah. So I think that's a great lesson. So I mean, you say it didn't make a mistake, but it was a lesson nonetheless.
Yeah, correct.
Because it was kind of made a distinction in the way you like look at certain things, and you're like, oh, this is a bit more clear for yourself. So
lucky I didn't make the mistake.
So Rusmin, you get a good meal, I guess. So you can let him know what you want, I guess.
Expensive one.
All right. So I think we just wanted to share our investment lessons, and of course, if you have any investment lessons yourself, feel free to share them as well. So I just want to summarize. So basically, we have investment lessons for ourselves. Rusmin had a lesson where you have to stick to a system, stick to your target price, and when it gets there, you know, just invest your particular tranche. So make sure that you're invested. For myself, is the stock market is not the economy. I think that disjunct between, you know, COVID deaths and the market going up, it just felt so cold to me that, you know, people were making money as people were dying. So that was a kind of like eye opener for me. In
a way, I think the market is reacting like 6 months, 9 months.
They've already priced in all the deaths that were going to happen, and I think it's a bit cold. That's the way capitalism is, in a way. That this is the profit that I'm looking at, and it just went up. And that was my lesson, and so that was quite something for me. For Kenny, it's basically, you know, observing that you must have a watch list of high quality stocks to look at, and then when you're ready, just jump right in. And for Victor, it was about, you know, some companies are different, and each crisis is different as well. So you need to invest accordingly. So those are our investment lessons for 2020. I'm sure there's so many more because this year was just like a tumultuous year. So if you have your own investment lessons that you want to share with us, feel free to put them in the comment box. We'd love to hear from you, and we can all learn from each other as well, and everyone else watching this as well. So again, if you liked our roundtable discussions, you know, feel free to hit the like button, subscribe to our channel, because we have many more roundtable discussions coming next year as well. So we want to make sure that the videos come to you as fresh as they come. So once again, thank you for watching.
Thank you. And in the meantime, Merry Christmas and Happy New Year.
Merry Christmas and a Happy New Year. So we'll see you around next year, and thank you for watching.
See you.